Ladies and gentlemen, good day and welcome to Mangalore Refinery and Petrochemicals Limited earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Payal Shah from Prabhudas Lilladher. Thank you and over to you, ma'am.
Thanks, Arshia. On behalf of Prabhudas Lilladher, I welcome you all to the Q2 FY24 earnings call of Mangalore Refinery and Petrochemicals Limited. We have with us the management represented by Mr. Sanjay Verma, Managing Director, Mr. Vivek C. Tongaonkar, Director Finance, Mr. BHV Prasad, ED Projects, Mr. Shyam Kamath, ED Refinery, and Mr. Yogesh Nayak, GGM IC Finance. I would like to hand over the call to the management for opening remarks, after which we can open the floor for Q&A. Thank you and over to you, sir.
Yeah, thank you very much. Thank you, Payal. This is Vivek Tongaonkar, Director of Finance and CFO, Mangalore Refinery and Petrochemicals Limited. As Payal has already mentioned, I have with me over here our Managing Director, Sri Sanjay Verma, Mr. BHV Prasad, who is the Executive Director Projects, Mr. Shyam Prasad Kamath, who is Executive Director Refinery, Mr. Yogesh Nayak, he is Group General Manager in charge Finance. Our results for Q2 and H1 of financial year 23-24 are with you, and I hope that you would have gone through them. Let me just start with some highlights. MRPL achieved a throughput of 3.21 million metric tons during Q2 and 7.57 million metric tons during H1. In July 2023, we processed our ever highest monthly gross crude throughput of 1.44 million metric tons. This reflects our capacity to scale to new highs during robust crack margins by encashing the available opportunity. We clocked ever best BS6 motor spirit, that is petrol, monthly production of 195,000 metric tons during August 2023. The previous highest was in June 2023 at 174,000 metric tons. On the award front, MRPL bagged the following awards: Government E-Market Star Buyer Award, Dun & Bradstreet Award for Best Mini Ratna Public Sector Undertaking across all sectors, Best Innovation in Refinery Award, which is second time in a row during Energy and Technology Meet 2023, and Water Management Company of the Year 2023 from Energy and Environment Foundation. MRPL also became the first refinery in India to be certified with AS 9100D 2016 for production, certification, and distribution of aviation turbine fuel, which attests to the quality in the processing. Some of the financial and operational statistics pertaining to Q2 are as follows. Our gross refinery margin is $17.11 dollars per barrel as against a negative figure of $4.46 per barrel in the previous Q2. The resultant PBT is 1,606 crores against a loss of 2,576 in the previous Q2. The PAT is 1,059 crores versus a loss of 1,789 crores in the Q2 of the last year. Accordingly, our EPS has gone up to 6.04 for this quarter as against the negative figure of 10.21 in the previous Q2. We have reduced our total borrowings by 4,234 crores as compared to September 2022, and resultantly the debt equity ratio has come down to 1.217 as against 2.24 in September 2022. The finance cost has also been reduced to 311 crores as against 315 crores in the previous Q2. During the current year H1 itself, MRPL has reduced its long-term borrowings by 3,284 crores. The net worth of the company has improved from 8,106 crores as of end September 22 to rupees 11,906 crores as of end of September 23. It's an impressive 46% improvement in a one-year period. The standalone EPS, which is not annualized, has improved up 125% from 5.24 as of end September 22 to 11.82 as of end September 23. We would again like to reiterate that the above results were achieved even after taking mandatory shutdown of Phase 3 refinery complex during Q2, which lasted for about 45 days. As far as the outlook is concerned, gross refinery margin is a market play depending on what margins are available in the international markets. But we are committed to bring on board value-added products, energy efficiency and flexibility in crude processing, which is a USP of MRPL to maximize advantage of the available opportunities. Focus would also remain on optimizing the operating costs and reducing debt. That is a brief introduction about MRPL. We would now be willing to take questions from the analysts. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tabri Hazarika from MK Global. Please go ahead.
Good afternoon, sir. I have 3 questions. First one is a bookkeeping question. Your OPEX has actually gone up during this quarter. Is it because of the shutdown or
yes,
is it anything specific?
So it is about because of the shutdown and the reduction in the throughput that was there. Correspondingly, reduction in throughput.
Okay, but was there any excise duty differential on closing stocks? Those kind of adjustments were also there?
Come back?
Some excise duty payments and all, which are generally held up actually at this point of time.
No much impact.
Nothing of that sort. Okay, sir. Second question is, how much Russian crude are you procuring right now, and what is the discount you have got Q1 versus Q2, and also current run rate?
Generally in India, now the Russian barrels that are available at a discount are broadly about 35 to 40% in the country. We are also at similar levels as far as MRPL is concerned. Discounts which were earlier higher on in the Q1 have reduced, but yes, they were still there for the Q2 crude procurement.
Can you give us some numbers on the discounts?
Broadly, they are in line with what you would have got from the media reports also, and they are accordingly in those lines only.
Okay, and right now also it's like it's further fallen, or it's like stable right now, considering that crude prices have gone up? In
the immediate future, I don't think we have had any new procurements as of now. They will come now.
Okay, sir. And the last question is regarding your green hydrogen tender. So has it been awarded, and any details on that?
Green hydrogen tender, basically, we are having an alternate thought of, our parent company ONGC is planning to go ahead with the bigger scale project in Mangalore. We are planning to go along with ONGC for the green project, the green hydrogen project.
Okay, so you will not be setting up a electrolyzer, you will be buying from ONGC the green hydrogen for the refinery. Is that correct?
That's what we have. It is actually in conceptualization stage. Either we go for a very minimal investment initially, and later on, whenever ONGC's project comes, we want to go along with them, but it is in discussion stage at this moment.
So because I remember seeing a tender of 500 tons per annum, I guess something of that sort, which was out. So that has been scrapped right now, or it's still on?
No, it is not yet scrapped.
Yeah.
It is just an EOI we have placed earlier. It's still under consideration.
Okay, sir. Okay, sir, fair enough. Thank you so much, and all the best. Yeah.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone phone. The next question is from the line of Mr. Abhishek Nigam from Motilal Oswal. Please go ahead, sir.
Yeah, hi. Thank you so much for the opportunity. So just on the shutdown, so basically third quarter, we will see full throughput, right? Without any shutdown?
Third quarter, we don't expect any shutdown as of now. There's no planned shutdown at all.
Yes, full throughput.
Full throughput.
Full throughput. Okay. And same for FY25. There is no minor shutdown planned for FY25, is it?
25, there would be a shutdown also. It would be in phase 2. Because these are mandatory shutdowns and they come up with, depending upon the period that they are due. This thing.
Fair enough. Is it possible to give us a broad sense of how much volume impact could be there in FY25?
FY25.
Yeah, I mean,
we are targeting more than 100% of our design capacity to be run. Our design capacity is 15. We are targeting that it should be more than 100%. So we don't envisage too much of as far as the design capacity is concerned.
Okay, fair enough. So you will just plan it in such a way that there is no major impact.
Yeah.
Fair
as
enough.
far as design capacity. So
See, Abhishek, this is Sanjay Verma, Managing Director speaking. To add on to what Director of Finance has spoken to you,
sure.
In the current year also, we had a shutdown for 45 days for our phase 3 refinery, which has a lot of complex units. Despite of that, we are definitely going to have a more than 100% capacity utilization. And as you are aware that MRPL refinery has got 3 trains of crude trains basically.
Sure.
And the second train which will go for a mandatory shutdown in Q2 next year most probably. And we don't anticipate any lower throughput than 100% in the next year also. And primarily, if you see the data of MRPL, historically, our strength is our physical performance. So we are looking for a more than 100% capacity utilization in years to come, despite of these mandatory shutdowns. Last year, if you can recall, we have even clocked 17.14 MMTPA of capacity utilization because that year was having 0 shutdown. So once in a 4-year refinery do get 1 year such where none of the 3 trains will have any shutdown. So that is the capability where we can be somewhere between our 100% capacity utilization to somewhere around 17 odd.
Okay, fair enough. That's useful. And last question for me, in terms of capex, if you could give us a guidance for second half and FY25.
For capex, our annual capex would be around 1,000 crores. So for the next H2, for the H2 that is coming up, broadly it should be between 400 to 500 crores.
Okay. And FY25, will you be able to give us some sense?
25 also, broadly it should be about 1,000 crores.
Okay.
As of now.
Perfect. Thank you so much, sir.
Thank you.
That's all from me.
Before we take the next question, we would like to remind all the participants that you may press star and 1 to ask a question. The next question is from the line of Mr. Saket Kapoor from Kapoor Co. Please go ahead, sir.
Yeah, namaskar, sir, and thank you for this opportunity. Sir, as being alluded by you that we are looking for a capex of 400 crore for H2 of this financial year. So this 400 crore will lead for the modernization. If you could explain the nature of the capex.
So the 400-500 crores that we are likely to spend is on existing projects that are continuing. We have got the Devangundi project coming up, which is under execution. It is likely to be completed during this H2. So those payments would be there. There would be other capex expenditures that are undertaken within the refinery also. So those which are already under execution. And for that also it's already budgeted, so these expenditures would be completed or achieved during this H2. And for that 500 crores odd is likely to be spent.
Sir, please sir, you continue first.
Yeah, capex, in addition to our Director of Finance, what he said, the Devangundi is a marketing terminal project. Then we have a bitumen blowing unit, which is coming up, which is getting completed in the next quarter. Then a few other units which are within the refinery is being put up. And the next one is, we are also into retail marketing. The capex also includes retail outlets.
Okay. Sir, closing balance for September, the first half is closer is at 678 crore. And we will be spending 500 more, and the amount that is to be capitalized as on March 24 would be closer to what value, sir?
That is closer to, as the Director of Finance said, 1,000 crores. 600 already we have booked up to 30th September. Based on the completion of the project, it will be taken to property, plant and equipment. Otherwise, it will be in the capital work in progress.
Right, sir. And for FY24-25, what have we outlined, sir? The amount is, yeah.
1,000 crores, in the range of 1,000 crores.
Okay. So, a request, sir, in the press release part, if we can also provide us with the breakup of the capex part, amount spent on the projects also, and when the project is likely to be commissioned, that would give us more color on where the amount have been spent. So that will suffice a lot of our queries. Please look into the component of the simple. And firstly, sir, thank you for arranging this call, and we will look forward for the continuity. Sir, as we have done this maintenance shutdown, what are the benefits in terms of the improvement in yields on distillates that we may incur going ahead? And sir, are we working on any residue upgradation program also?
Mr. Kapoor, this is Sanjay Verma, Managing Director. I would like to just respond to it, and then I will hand over to ED Refinery if we can suffice to think further to it. Phase 3 refinery, what we have gone for a mandatory shutdown was basically for a certain critical unit where the catalyst was at the end of its life. So the replacement of the catalyst and inspections and proving the refinery as per the mandatory requirements and statutory requirements. So those were this thing, and this phase 3 refinery of MRPL has a bulk of the bottom upgrader units only. So post this shutdown, I think the distillate yield and all is not likely to be impacted. Like we are having a distillate yield of typically 78 to 80% of the yield is there. And the SOR, that is a start of run condition. The efficiency may be marginally little high, but we would like to, at this point of time, this is what is our outlook, because no additional unit in phase 3 has been, brought in. And I will just ask if our ED Refinery wants to add on to your question. Anything else?
Sir, it's basically on energy front, we are expecting there will be an improvement, because whatever issues we had, because it's a mandatory shutdown, so definitely we will be having some improvements on the energy front. As you rightly said, on the catalyst, since they are in the start-off run, definitely there will be some improvements.
Just your second question on upgradation plans, it is still in consideration. It is in feasibility report stage. At this moment, we'll come back to you on upgradation project. There are few in plan.
Sir, in your earlier reply, you mentioned that we have our capacity at 15 million ton, and with improved set of throughput, we look forward for 17 million ton. This is the number we can work with this maintenance.
So, 15 million metric tons is the design capacity of the plant, depending upon how the availability of crudes and the availability of the equipment, etc. We have been able to run it at more than 100%. And previous year we did 17 million metric tons of crude processing. Whether that is a representative for future years, as of now, we would not be able to say that. But as MD had mentioned earlier on, it's usually when all the full refineries available continuous basis once in 4 years. Generally, the processing would be on towards the higher size.
Last point on this, sir, inventory gain, sir. Can you outline to us the number since what have been the inventory gain, or what is the closing? How is the closing stock inventory valued, and the color on the same?
Inventory gain for H1 it is around $2.
Then the prices have increased from compared to 31st March of 2023 to 30th September 2023. There is an inventory gain of 2.1. However, the inventory levels have come down. We have maintained almost optimal inventory level.
So can you quantify the number in absolute number term? $2 will translate into what amount in profit?
$2.1 will amount to 960 crores.
960 crore.
Yeah.
So the EBITDA number of 4332 contains an inventory gain of 960 crore.
Yes, the inventory gain is only a change in opening stock and closing stock. However, going forward, the prices remains the same. It will be realized.
It will be realized. Sir, and so the factors that has led to this GRM of $17 are these? If you could give us some understanding how the GRMs are currently shaping up, and what factors did lead to these GRMs of $17 and its continuity? If you could give us some color whether this is a new normal set or there are external factors, when they dissipate there will be a mean revision again.
MD sir has told already, this is a market driven. The prices are market driven. So going forward we cannot predict, but this 17.11 is because of our internal as well as external factor. Internally, we achieved a maximum throughput during the cracks were good. So July we have achieved highest throughput. Then the prices, cracks have been improved since August. Then even though the SAED is levied at a certain level from 14th August, we could get the good margins in our products. So that has resulted in a good GRM for the Q2.
And what are the current cracks?
I would like to add on, Sanjay Verma here, Managing Director, what our head finance was speaking about. If you see the general across the refinery industry in India, all GRMs are reported very good. So one factor is that market conditions were good in the Q2. So that is definitely over there. And outlook for Q3 as we see today, my guess is that yes, the cracks with the winter coming in the western side of the world likely to hold on to this levels, and we are looking for a similar kind of a performance in Q3 also.
Correct, sir. Okay. Thank you, sir. I'll join the queue. And for the ATF sale part, if you could give us an understanding now, what annual number? Yeah, I'll come in the queue for my remaining questions.
Please rejoin the question.
Yes, madam. Thank you.
The next question is from the line of Ribu On from UBS. Please go ahead.
Yeah, thanks, sir, for the opportunity. So firstly, sir, can you please tell us what was the fuel and loss for this quarter or for the first half in terms of percentage? And how do we plan to maybe reduce this kind of number going forward?
So for fuel and loss for this quarter, Q2 was 11.28%. And for the previous year, Q2, it was 11.66%.
Okay. And sir, so shall we take this like number going forward, or are we doing any projects so that we can reduce this?
So it is likely to improve because as our ED refinery has told to the earlier question, our phase 3 unit we have undertaken a shutdown. So there were little efficiencies issues which has been addressed, and we are looking into a betterment of this number, what our Director of Finance has spoken about. So Q3 we are likely to have a better fuel and loss number. And just to add on that this fuel and loss is not for the refinery alone, because as you are aware that we are also operating a aromatic complex also within the refinery. So this is a combined fuel and loss for aromatic complex as well as a 15 million metric ton of the refinery. And we are expecting to better it in the current quarter.
Got it, sir. Sir, my second question is our plans for ramping up our fuel retail outlets. So Can you give us a number? How many retail outlets we have now, and what's the targets for maybe end FY24 or FY25?
So, Righu, let me just give a brief that we aspire to have our domestic market capture to the tune of 1 million metric ton in coming 3 to 5 years. Okay. As of now, we have a 75 retail outlet, and advertisement for another 1800 retail outlet is out, and we are likely to conclude it very shortly. And we are aggressively going on increasing our footprint in the retail outlets. And we are looking maybe in another 3 years close to around 500 odd retail outlets, predominantly in a first phase in the southern India. And once we are established in the southern India, we are also in a phase 2 of our retail marketing expansion. We would like to move upward, Western India and North India side. So these are the stages of planning and strategies what we are having for the expansion of the marketing retail networks.
This year
okay, sir, got it. And
sir, we should have more than 100 retail units up and running. Yes.
Okay, sir. And sir, if you can give us the throughput from the retail outlets for this quarter or the first half, from like 75 outlets.
It's very difficult because it all depends upon the location, highway, rural, all those kind of things are there. But in a very general term, our retail outlet typically are doing a better throughput with the competitors by around 20 KL to 30 KL per outlet. And we are getting a good, response through our customers, and customers are coming back to our retail outlets. This is what is our experience as of now.
Okay, sir. Okay, sir. Thanks for the detailed answer. And lastly, sir, are you taking any LNG, or do you plan to take any? Because I think the prices have again gone up slightly. So what kind of prices do make sense for us?
Yeah, just a quick answer to this question, that we have a connectivity with the Kochi gas line of GAIL, and currently we are not taking, but we are actively considering looking into the price of the gas, and once it becomes economical for us for the refinery operation, we do switch over. In past we have switched over, so this is an economic decision based on which we keep on taking gas into our system. And this gas we are using as a feed also, as a fuel also. So there are two economic calculations which come into the play. For fuel is a one calculation. If it breaks even, we use it as a fuel. Otherwise, as a feed also another calculation is there. If it is economical, we take it as a feed to certain process units.
Yes, sir. If you can mention, any kind of percentage slope to Brent or something like that, at like what economic levels it makes sense for us?
It's as per the industry practice.
Currently, we would not be able to place a figure as of now.
Okay, sir. Got it, sir. Got it, sir. Thank you so much for your time, sir.
Thank you. Thank you, Riju.
The next question is from the line of Mr. Gagan Dixit from Elara Securities. Please go ahead.
Yeah. Thanks for taking my question. Sir, can you share details of this OMPL? What is the utilization in Q1 and Q2?
OMPL utilization in Q1 and Q2. OMPL is now, it is already integrated with MRPL. There is no separate company or unit as such for OMPL as of now.
Okay. So, if we get the sense at least that what is the sales or volume that's produced, that would be helpful, sir.
It's like any other unit, so it is now continuously utilized.
Yeah, Gagan, this is Sanjay Verma, Managing Director speaking. Just to reiterate what our Director of Finance has told. OMPL as of now doesn't exist. It has been merged with effect to 1st May 2022 with MRPL. It is a consolidated balance sheet which comes. So whatever units are there in OMPL, those are like any other units in the refinery premises. And to answer to your specific questions, the units which are available in the OMPL, presently we run it on a reformate mode. The the PX, the other product, because the PX market is not economical, so we are not operating. We have a product swing from PX to reformate mode. And the block which is producing PX in our aromatic complex, that is erstwhile OMPL, operates at a full capacity.
Okay, sir. And sir, my second question is, when you told that Russian crude discount is typically 35 to 40%, so this is excluding the shipping charges or including the, that shipping charge?
Discount, no.
I think you have misunderstood. Let me clarify. It is the Russian crude what was, processed is that value.
Quantum of the total crude, out of which Russian crude is 35 to 40%. For the Indian markets as such, Indian refineries as such, we are also on similar lines.
Okay. And sir, my third question is, in the previous calls, ONGC actually told that, about the question of the merger of this MRPL with the HPCL. So they said that there is some tax benefit that this MRPL would lose due to the merger. So if you throw some light of it, or how much is the amount, something, because they say that something, at least they are waiting for 3 to 4 year period to utilize all the remaining tax benefits.
When OMPL got merged with MRPL, there were certain losses of OMPL which were also taken over by MRPL, which give benefit as far as the taxation is concerned to MRPL. Total quantum was around 7,000 crores odd at that time. Still we have around 3,000 odd crores of losses which need to be considered for and take advantage of the tax because of that merger part of it. So which we expect that over a period of 3 to 4 years, this would be utilized. So if we, that is what ONGC would have also mentioned to you over there. So if at all any other mergers, if we don't, minimally 5 years have to happen till we complete this takeover, after the takeover for these losses to be considered. Otherwise, there would be a refund of taxes, etc., which would not make any deal, so to say, economical for whoever does it.
So just to add on to what Director of Finance has spoken, this is Sanjay Verma, Managing Director. I think it is a call which will be taken by our parent company, holding company, which is ONGC, at an appropriate time. And to best of our understanding, these are the issues which are being explained by Mr. Vivek, Director of Finance, MRPL.
Yeah, that's helpful, sir. That's helpful. And happy Diwali, sir. Thanks, sir.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone phone. The next question is from the line of Mr. Saket Kapoor from Kapoor & Co. Please go ahead, sir.
Yes, sir. In terms of the OMPL part, sir, which you were mentioning, so what has been our total investment in the project, and how is the payback working currently? And that units are working at 100% utilization levels? Sir, am I there, sir, in line?
Yes,
hello?
Sir, you're audible.
Yeah. I have completed my question.
Yes, sir. Give me a second, sir. We have got disconnected from the management line. Please continue to hold on. I'm trying to...
जी मैम जी ठीक.
Equity as well as loans.
Yes, the management line is connected. Mr. Saket, you can please repeat your question.
Yes. Sir, I was coming again to this OMPL part. How much has been our investment there in the unit, and currently how is the physical performance of the unit, and also on the profitability ones, how are the margins in the polypropylene business?
Okay, so the first part of it is that investment by OMPL, it was we took over the equity from ONGC and also took over the loans that were outstanding, which is around 4,000 crores in totality. Performance of the unit, yes, it is performing. We are producing reformate as already MD mentioned earlier on. So this was, it is already, the process unit is already in stream, so to say. And what was your last?
So Mr.
Margin on the polypropylene.
That polypropylene, what you are talking, is not produced in OMPL.
Okay, sir.
In the refinery complex, and that unit also is performing more than 100% capacity. And that unit also underwent a mandatory shutdown along with the phase 3 unit, because it is a part of the phase 3 unit, and it is put back to the operation and running at currently at 100% plus capacity.
Okay. So, sir, what have been the product profile for OMPL currently when we took over OMPL?
Let me give you a brief. It's our aromatic complex right now. We don't call it as a OMPL. I am repeating again. Our aromatic complex is located in a SEZ area adjacent to the refinery. The original products were paraxylene and benzene. Correct. But as I mentioned to the earlier question, that paraxylene market is down at this point of time, and we have a production capabilities in the refinery as well as in our aromatic complex. So we have swinged our product slate from paraxylene mode to a reformate mode, which goes for the MS making, and being a SEZ unit, it is getting exported and it earns a good margin. So that is the operation of the aromatic complex, and the complex is running currently on more than 100% capacity utilization on reformate mode.
Okay. And sir, you mentioned in your press release about the ATF part also. So currently, in the product profile, what percentage is attributed towards ATF, and how is this ATF sales going to be ramped up on an annual number? What should we look forward?
ATF, yeah. ATF, typically whatever we produce, 80% of the ATF gets exported. And we have a joint venture within India with the Shell MRPL JV, through which we channelize the domestic market, and OMCs also buy occasionally ATF from MRPL. And what was mentioned in our press release was regarding a certification which MRPL has obtained in this Q2, and that is, I understand that MRPL is the first Indian refinery and very few in the world who has got accredited with the aerospace standard AS 9100D, revision 2016. This is basically a quality management requirement for aviation, space and defense organization, and MRPL has been certified to complying with this kind of a standard. So this gives us an edge in our international market about the quality, production and distribution of the aviation turbine fuel, and that puts us on a little better position as far as the marketing of ATF is concerned, both in export and domestic market.
But it is all through the JV and direct sales to OMC, as you mentioned. We are not selling under MRPL directly. It is not sold. It is sold.
Domestic sales, if OMCs wants to buy from MRPL, we do give them. JV is our JV, as I told you, is another channel through which in a southern part some 10 odd airports they are operating, and we are earning profit out of that JV. 20% typically is our domestic penetration on this, and we are expanding through our JV on this for increasing the...
This JV is our marketing arm for ATF.
Okay. And our current market share in the ATF?
In a few, I can tell in a few of the airports, major airports, in Bangalore we are number 2. Similarly, in other airport in South India, there is one more airport, Trichy, we are number 2. In all other places, either we are either number 3 or number 2. In terms of standing in volumes.
So I would just like to add on to what Mr. Prasad, our ED project and marketing, is talking about. Devangundi, we are coming up. MRPL is coming out with a terminal. So which is getting fed from the Mangalore pipeline, And with this, once it gets commissioned in this quarter, mechanical completion anytime it will happen, and shortly either at end of this quarter or mid of the next quarter, we hope to be online with that Devangundi terminal, which is in the outskirts of Bangalore. So this will bring a lot of attractive cost of placement of various products in Bangalore, including ATF, and which will make us to capture more market in the southern India. So that is another focus area for MRPL, through which we look to penetrate in the auto fuel and the aviation turbine fuel also.
Right, sir. Sir, one bookkeeping question, if you may permit me. Firstly, what goes into the consolidation part? That the other income line item is what gets reduced. So if you could explain that, and also there is a liability provision written off to the tune of 67 crore for this first half. So if you could explain these two line items.
Yes, we have got your question. I will request our Group General Manager Finance in charge of the finance function. He will address your question. Just give me a minute.
These on consolidation process, we have to eliminate the intercompany transactions, by doing which we are consolidating, and the consolidated profits we have reported 1,598 crores against 1,606 crores. This is based from Shell JV, that is pertaining to previous year, which was more than that profit share of current year. Because of that, the consolidated profit has come down. Only this is the reason. Otherwise, if the profits are equivalent to the dividend, there will be a higher consolidated profits.
Sir, your line got dropped, sir, or either I missed it. If you could just repeat your statement again.
Yeah, during the consolidation process, we are eliminating the intercompany transactions. We have only one JV with the Shell for marketing the aviation turbine fuel, wherein we have in receipt of a dividend pertaining to the previous financial year, which is more than the current financial year's 50% of profit. We have a 50-50 share in that, MRPL as well as Shell. By eliminating this intercompany transactions, the reported PBT is less compared to the standalone PBT. 1,606 was for the Q2 on standalone basis. On consolidation, it is 1,598 crores.
Okay, I'll get it offline, sir. And for the liability written off, sir?
That is also same. The intercompany transactions, if anything is there, we have to eliminate the payables and the receivables.
Right, sir. Sir, and last point on the income tax paid, we paid to the tune of 1,400 crore. Yeah, ma'am, I'm just concluding, ma'am. This is the last point, please, if I may.
Please go ahead.
Thank you. Yeah, thank you. The income tax paid is to the tune of 1,400 crore. So this is all attributable towards the performance of the first half. That is 45% of what is due to be paid as on September 15.
1,400 crores. Which quarter you are saying?
Oh, sorry, it is 400, I think so. I'm sorry. Income tax net of
400 only we have paid.
Yeah. Oh, this 400 is attributable towards the operation profit for the first half, or any prepaid items, or what? If you could give some color on this.
Under MAT provisions, we have to pay this for the current profits only.
Current profits only.
Yeah.
Yes, sir, we look forward for the continuity of the calls and also some more understanding in your press release, as requested earlier on the capex part. If that could be outlined, that would suffice a lot of our interest, sir. And thank you once again, Prabhudas.
We will look into that matter and be in touch with you.
Yeah, thank you once again, sir, for giving us this opportunity.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you very much, and we are happy to be able to take questions, and we would continue to engage with the analysts. Separately also, if anybody else wants to be in touch with us, we welcome all those queries, and we hope to meet the analysts and satisfy their queries as far as possible. Thank you very much.
So,
Yeah.
This is Sanjay Verma, Managing Director. On behalf of MRPL and my colleagues over here, I thank everybody who have taken the time out and raised their query. I hope that we have responded to the queries, and if any further queries are there, as Director of Finance has told that we are open for getting connected further. One-to-one also is not an issue. So we thank all investors and analysts for this. And looking forward, the forward-looking statement is that our annual turnaround of Phase 3 refinery is over, and we are looking for consolidating our position in H2. And I think once again we thank you from MRPL side to everybody. Thank you, madam. Over to you.
Thank you, sir. On behalf of Prabhudas Leeladhar Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.